Welcome back to another Ask George. This is a segment where I take questions from you, the audience, and I try to answer as best as I can with what I know about Bitcoin, crypto, finances, and everything else. So, enjoy. There are 5 questions today that I'll be answering. And obviously with Bitcoin at an all-time high and alts coming back, there's a lot more excitement, so there's a lot more questions. But if you want to ask your own question, make sure you do so. Submit on my website, CryptosRUs.com, and click that Ask George button and submit your question. All right, let's jump right in.
Hey George, my name is Samir. First of all, I just want to thank you for putting out such good content. And now on to my question. So, usually when a lot of liquidity comes into the scene of altcoins, what I've heard is that thus far is about 80 to 90% of liquidity really goes into the top 100 coins. So although they have higher market caps, so it's harder for the price to rise, I'm wondering if that would mean that it makes more sense to invest really selectively in the top 100 altcoins, or is it better to, let's say, get something in the 2, 3, or 400 top coins, really closer to the bottom? But if that's really a wise decision, or if you're just taking too much of a gamble with that. Thank you.
Okay, so this is a good question. I get asked this all the time. Oh, well, before, a lot more than now. But a lot of people in this space want to make a lot of money. What's the best way to maximize returns, right? A lot of people look at Bitcoin and they think it's too big. Oh, I'm only going to make 2 to 3x. It's not enough. And then they look at big caps, maybe 5 to 10x. Oh, that's good, but it's not good enough. I want my 20, 50, 100x gains, right? So when is the best time to gamble into those, and when is the best time to not gamble in those? Well, I think the market condition is a little bit different this cycle versus last cycle, and also I think timing is crucial. So just think about it. If you have this much money, and I don't know how much, let's look at last cycle. I'm just going to predict maybe 100 billion overall because the market cap went to a few trillions. So last cycle, basically how it worked was money was put into Bitcoin. We had that top for Bitcoin, obviously around 69,000. Then a lot of money flew out and started being put everywhere, right? The L1s like Ethereum and Solana, Cardano, these guys blew up. And then some of that money also went into memes. That's why Doge and Shiba, Floki, and others blew up. And then the remainder amount went into all the other crypto out there. And there were a lot of promising ones out there, but they were relatively small. But because their market cap's so small, when people put money into them, they blew up, right? That's what altcoin season is all about. But fast forward now, 4 years later, people are waiting for the same thing. Conditions are a little bit different because retail, that bucket of money I was talking about, right? It's still kind of on the sidelines. Here's why. Because it's not in Bitcoin. Bitcoin right now is driven by institutions. We know that. Billions upon billions every week from the institutions. So retail has that bucket of money. In January, earlier this year, we saw a lot of that money go into the memes, right? Memes blew up. And then since then, a lot of the money came out again. People got scared. And, that's why we haven't really seen a boom or even a huge recovery with the alts yet. Like Ethereum, Solana, Cardano, XRP, these guys are still down versus their January high. So the money is still there. The thing is, when is that bucket of money going to come back into the alts and into memes? Well, that's where timing comes in. Because right now, I think a lot of retail, still kind of wary, still not trusting that there will be an altcoin season. They're kind of like just still holding, right? And the unfortunate thing is, because a lot of these people are holding, not a lot of alts are moving upwards in a way that they were in previous cycles, right? Because previous cycles, if you look at it in 2021, even before Bitcoin really topped out, alts started gaining a lot of strength and started going up. Right now, the alts, yes, the last few days have been great. A lot of alts did come up. But again, like I said, still nowhere near January high. And most are still nowhere near 2021 high. So I think timing is critical. I think this cycle, we're going to have to wait it out longer. You could still DCA, right? It's still a good time to DCA. But I think you have to wait it out longer. I don't think altcoin season is going to start until way end of this year. And also you have to be more careful. I don't think you could gamble like before. I don't think you could just put money everywhere like previous cycles and just think everything's going to blow up, because there's so much more. If you look at the number of alts in 2021 versus now, it's probably gone up tenfold, if not more than that. It could be up even more. Now we have millions of coins, believe it or not. And there are thousands of new memes coming out every single day. So you got to be careful. You can't just gamble in whatever you want. That's a sure way to lose money. You still have to pick the good ones. So I would say, like, in terms of how to maximize your money, still stick with Bitcoin. Bitcoin's like the sure thing right now. Slow upwards movement. Maybe you're not going to get that 100x, but still 2 to 3x return from even these levels. That's pretty good. And then also stick with the big caps. They're moving the most. Whenever we have recovery, they recover up the most. You may have noticed mid caps, small caps, they haven't moved at all. So I think you got to play by ear. Wait for the timing later this year when everything is blowing up. That's when you usually see that money, that bucket of money, start being diverted and elsewhere. And when you see like a lot of random small caps, mid caps start pumping like crazy, that's when it's probably the best time to like gamble on the smaller caps. That's what I'm thinking. This cycle's gonna be different.
My name is Todd Cox. I'm a Bitcoin investor and also a little bit of crypto. And I have a couple questions. Just want to say I love your platform. Your videos are great, especially because it seems to include all people as far as, you know, how much they're spending on crypto. Whether you have a little bit or a lot, you're welcome. I can just tell that you seem to appreciate everybody. And I really, really appreciate that part of it. I don't have a lot of money in it, but I still feel welcome. So yeah, my first question is just about the Bitcoin ETFs and BlackRock especially. They have 76 billion AUM, but my understanding is it's really on behalf of clients. So it's not like it's all concentrated under BlackRock's, you know, actual ownership. And I just wanted to get clarity on that, just because everybody seems to be scared that BlackRock's cornering the market, but in reality it's really the customers that own it. So I don't think it's as big a deal as what people think it is. And second question is, if you can explain Ethereum and why people want to invest in Ethereum, other than the fact that it's first mover advantage. It doesn't seem to be a really welcoming platform. Every time I've used it, it's either, you know, no one's on it and there's low fees, or everybody's on it and there's high fees. The gas fees are set up to be ridiculous. If I don't, you know, put the right amount of gas fees in, I lose the amount of money that I spent on it in Ethereum. It doesn't seem to be a very good product, especially if you don't have a lot of money. It seems to be a rich man's playground, and I just don't see the viability of it with all the other layer 2s or layer 1s that are out there. Why does Ethereum still get a lot of play from investors? It just makes no sense to me. I know you don't like it, but maybe you can tell people like what it is that people are like about it. So anyways, thank you so much, George.
All right, Todd, two-part question. First part, BlackRock. Okay. I think there is a lot of confusion. A lot of people do refer to BlackRock's ETF almost as if the entire AUM, like you said, belongs to BlackRock. You are right. It belongs to the clients. Basically, how the ETF is structured, they have this bucket of Bitcoin and they can sell X amount of shares based on that bucket. And if a lot of demand is out there and buying a whole bunch of shares, then they have to buy more Bitcoin, right? That's essentially how I understand it. And if a lot of people sell the shares, then they sell off the Bitcoin. ETF goes both ways, but obviously a lot more inflows than outflows, especially for BlackRock. Here's the difference between BlackRock's IBIT and all the other ETFs that I've been covering every single day. I show the ETF inflows and outflows, right? Like consistently, almost every week. And one thing that's consistent is IBIT hardly ever sells. Within the last year, I would say probably only a handful, maybe 5 or 6 times, I've seen outflow from IBIT. Every other day is inflow or zero. It's not the case with all the other ETFs. Fidelity's a big player. Their ETF doesn't act the same way. On bad days, bad weeks, bad months, for the most part, you see a lot of outflow from all the other Bitcoin ETFs except IBIT. And BlackRock themselves have said that they have put their own IBIT ETF into other funds that they have, right? So I don't think we know the true extent of all the buyers and all the other funds that also hold IBIT. And I think a lot of it is belonging to BlackRock themselves. So that's why they're able to control the outflow. They almost never have any outflow. It's unnatural for ETF. ETFs are supposed to work in and out. You're supposed to see it all the time. But even on dark days, when you see massive sellouts from other ETFs, BlackRock's at zero, or they're still having inflow. It almost doesn't make any sense. And I don't know if we'll ever get a true picture unless someone in BlackRock actually comes out and explains it and shows how, like, what the clientele list is and stuff. So that's the thing. That's why I think there is some concern there. But near term, obviously, the more they buy, the better it is for everyone because they're just removing Bitcoin from the supply. Number 2, Ethereum. The reason why so many people still love Ethereum is because of the last cycle. So many people made a lot of money in the last cycle when Ethereum almost topped out at 5,000, and they're all bag holders. That's essentially the reason why so many people still hold on to Ethereum. Now, you got to give Ethereum and Vitalik credit, right? They started the whole revolutions of L1s and smart contracts and everything else that follows. DeFi, DePIN, AI, everything, tokenization, ICOs. They started it all. But when they started it, they were the Lone Ranger, kind of like the iPhone, the first smartphone with a touchscreen. Okay? But since then, others have come into the marketplace. With phones, there's not that much competition. You only have a few other players like Samsung, Huawei, and a few others. But when it comes to L1s, man, there are thousands upon thousands of L1s, L2s, L0s, right? Base layers with smart contracts, with everything under the sun that work a lot better. Now, the user base, Ethereum still has a ton of it. Only a few chains, I would say, like Solana, have exceeded it in terms of if you measure it like the active addresses and usage and volume and all that stuff, right? But most chains out there don't have the same kind of usage and volume. So even though they may be really good, really fast, theoretically, no one's using them. So I would say Ethereum is, the death of the Ethereum is greatly exaggerated. It's going to be here for a long, long time. Vitalik and team is still trying to figure out how to upgrade it. And in the meantime, there's layer 2s that are getting really popular as well. But that's the reason. Because there are a lot of bag holders from the last cycle and they want to see their baby come back to life and go to new highs. That's really it.
George, my name is Sean Lyles with All the Alpha. I've been watching your channel for over 4 years now, and you've been a voice in helping me keep my conviction in Bitcoin and my faith that it is a great store of value. My question is, in your view, what traditional asset class will Bitcoin cannibalize first in a meaningful way? And what catalyst do you think will accelerate that capital rotation from legacy stores of value like real estate, equities, or gold into Bitcoin?
I love your take, by the way. I love this setup and your mannerism. Very different, very refreshing. Obviously, you have your own channel, so hopefully you're doing well, all the alpha. What asset class is going to be cannibalized? And I have to say, it has to be gold. Although, you got to look at it, okay? Very little amount of the new generation invest in gold. I'll just throw myself in there, and I'm not that young anymore, okay? I'm in my 40s. None of my friends, no one I know in my age group even invests in gold. We may have some gold because of jewelry. We may have some gold passed down from our parents, but none of us are actively investing in gold. And that's our generation. What about the new generation? The people that are in their 30s, 20s, teenagers. They're not investing in gold. So even though gold is not going to go away anytime soon, obviously gold is more than just a asset class for investment, but it's used in electronics and other things. There's other uses for gold. So just that alone will make it never go away. But outside of jewelry, as a store of value, as an investment, I just don't see the newer generations picking up on it. Okay. Everything is digital now. Everything is lightning fast. And that's the opposite of what gold is. Gold is hard to store, hard to carry around, hard to use. You have to depend on someone else to know if, first of all, you have real gold. And it's hard to sell. You don't know if you're going to get ripped off. I mean, there's so many things inherently bad with gold. So I just don't see it doing nearly as well as Bitcoin going forward. I can't imagine it. Even though gold has been rising up in price, it's like 3,300, 3,400 now, which is great. It's about 50% higher than when I remember it first hitting 2,000, right? Or 2,200 back in like 2010 or something. But it's been like a decade since then to go up that 50%. And look at something like Bitcoin, how much it's gone up in the last decade, right? There's no comparison. So if you're someone that's extremely wealthy and you want to protect your wealth, you don't care about gaining wealth, you simply just want to protect your wealth, then I could see gold being a really good, viable investment. But if you're someone young and you're still trying to build wealth, there's just nothing better than Bitcoin. I can't see gold being better than Bitcoin. So that's why I see Bitcoin cannibalizing gold's market cap. And I think many people agree with that, right? There's a lot of comparisons with gold's market cap, Bitcoin getting there one day and beating it, also ETF inflow. There are a lot of comparisons. And obviously, Bitcoin's called digital gold and all that, right? So that's kind of how I see it.
Hey, George, this is Mike. I thought of something that kind of original that I think your viewers might like, that you might use, that could be interesting to share. More specifically, there's been like 15,000 studies, medical studies, that have concluded that the human body has about 36 trillion cells. And that made me think of the US national debt at 37 trillion. So to try to put in perspective how much debt we're talking about and how bad things are in that regard.
I was wondering where you're going with that. It's good to know. Now I'm going to remember it. 36 trillion cells, 37 trillion in debt. People don't realize how much a trillion is, right? If you ever have time, go. You could do like these infographics or just search on Google, like what $1 million looks like and what $1 billion looks like. Right, $1 million in ones is like this big crate full of dollars, and then $1 billion is 1,000 of those crates. Now you go to $1 trillion. That's 1,000 times 1,000. People don't realize how large a trillion is. It's crazy. And that clock that I show sometimes on my channel continues to go upwards and upwards and upwards and upwards. That's just how much we spend as a nation. Okay. We are so into debt that we can never pay it off. I don't see any way really for us to get out of it quickly. Trump wants to use tariffs to offset our spending and hopefully cut into that. We'll see if it works. But man, we just rack up so much spending every single year, and that debt keeps going upwards and upwards and upwards, which is why Bitcoin is so important, which is why I believe in it so much now.
Hi George, this is Panda, but we're all George. When I filed my taxes with software like Coinly, I noticed a lot of discrepancies and very, very bad inaccuracies because of some old exchanges and old delisted coins, and I'm not really sure why, but it's really bad. How do you deal with that? I know you can manually remove coins and transactions, but it all seems so imprecise. And how do you deal with that and audits? Thank you.
Well, this is very specific. I'm not going to go into the exact little details, but crypto taxes suck. Okay, they really do. Tax softwares like Coinly, they can only do so much. You got to give it as much information as possible, which a lot of crypto people don't want to. But with crypto software, basically you plug in all your wallets, or you do a read API connection with your exchanges, and it tries to pull all the data. And the more data you give it, the better. So then it could see if you transfer from one wallet to another to another to another like that, right? But sometimes there are exchanges that don't offer API access, or exchanges has shut down, and then it doesn't know where you got the money from, so it'll count it as income. So unfortunately, you just have to go through. You have to spend some time to go through and fix and tell it, okay, this is income or this is transfer from somewhere else. And you could work with Coinly's team, and there's other tax softwares, but basically it sucks. But once you get it done, every year afterwards becomes much easier because it already knows all your wallets and everything, and it'll just calculate everything based on that. But this is the big reason, why so many people want to remove capital gains tax, because of all the complications. It's just going to make it so much easier for people to trade, and also so much easier for people to actually spend, because right now, no one really wants to spend their crypto. First of all, it's not at a level where people want to spend, but when they do, they don't want to deal with all this, right? So hopefully, we go down a road where we remove capital gains tax altogether, and then we don't have to worry about any of this. Well, they're talking about removing capital gains tax for transactions, not for just trades. So we'll still have to deal with it. But my advice to you is just, you got to spend a lot of time. Go through every transaction that you can. If you can't find where something's coming from or whatever, then you're gonna have to just count it as income and deal with it, or move to a country that has no capital gains tax. All right, guys, that's it for today's Ask George. I like these questions. A lot of good questions, a lot of interesting things. Make sure you submit your own if you have a question or a comment or whatever, and I'll try to cover it in a future video. All right? Have a good one, guys. Take care. Bye-bye.